points on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in December 7th, 2021, and the volatility isn't over. Today was a great day for the market, but it just was not good enough, and there are a couple of factors as well as trends that we haven't seen for a while that are still at play, and it's keeping investors on edge. But for the most part, we did recover a lot today, almost to the point of where everything dropped on the first Friday Omicron news. So we were able to recover. Some industries like travel, they are now above where they were when the Omicron news hit. It depends which stock, but that was a big driver in the markets today. There was good Omicron headlines over the weekend. Fauci said it's not that bad. He kind of walked back his statements. The hospitalization rate in South Africa didn't go crazy, so a lot of people were happy. Travel stocks led the way. Majority of the S&P 500 was up. Only 73 names down. Every single industry, whether it was SPX or even the Dow, everything was green. Literally every single industry. And then globally, it did very good overseas in Europe. We closed the round where we had the euro close, but we were still a little bullish in China. They did a little bit bad, but they did announce some easing today. So all in all, there was a lot of good things that happened. It was a nice bounce. If you were watching the premiums, you did get rewarded on the move, but not quite that much just yet. So that's why the next few days, all the catalysts for this week, all of that stuff is going to be important. So we got a lot to talk about. I'm going to go over all of that, what we're looking at for the rest of the week with the news, the plays that we made, and then the plays for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes. If Mondays get you more excited than Fridays because you know you have a whole week left of trading, then yeah, we're the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Chat at the chat, baby. So, right off the bat, like I said, the markets really did calm down today, and it was because of the virus fears, but ironically enough, or coincidentally enough, you also saw the bond market chill, and we've been talking about this. We said leading into Powell, there really should be a cap to how much the bonds are going to move, but coming in from Wednesday and Thursday, you're going to be getting a ton of bond auctions, so this is going to add a lot of supply. It looks like the bonds are chilling out, but pretty much what I'm trying to say here is that, yes, the virus headlines, they cooled down a little bit. You saw a lot of travel stocks lead the market. The airlines, Booking, Airbnb, they all did very good. They're even above where they were after that whole Thanksgiving drama, but at the same time, we're watching the whole taper tantrum stuff that also is taking a chill pill, which is kind of related to it, but not really. The point I'm trying to say, there is still a lot of the key factors at play at the same time. So we talked about it today. Today was good, but it just was not good enough. And that is because the markets are higher, but we are still pretty much at these danger zones. Essentially, we're right above that Tuesday close. Remember, we had the first freak out, then we bounced, and this was the second low. Wednesday is when it really started to get crazy, and that's where we had the test on Friday. So we're chilling a little bit more, but when you look at the pricing of the market, I mean, the market is just as worried as they were when the headlines first came out. Maybe there's a little more news to not overreact, but like we're saying, there's all of these other factors still at play right here, right now, not to mention just how the market has even moved. So add that to the fact now that all of the indexes moved over 1%. NASDAQ closed barely under there, but even 2% on the small caps. The Dow Jones was up 2% at one point as well today too. This is all pointing towards volatility. Again, once these 1% moves stop happening, then we'll be able to say the volatility has chilled out a little bit, but for the most part, it is looking like the volatility is still lurking today. Even how the premiums played out and even how they're going to play out tomorrow probably, it looks a lot like what we got last Monday. Remember, you're coming off of sell Friday. We bounced Monday. Remember, all the premiums are being weird, and then you saw all the drama kick off on Tuesday. And we said the same exact thing thing. The volatility is lurking, but now you also have the VIX backwardation able to show us a little bit more of that. So if you're not familiar with what this means, some people get a little bit confused, but this red line right here, this is showing you the prices in November 5th, and the blue line's November 29th. Then the green one is the live data, and then this one right here is the prior week that we just got out of, but the VIX is in backwardation, and the last time this happened was in January, at the beginning of the year, when we got a little bit of volatility. But if you're not familiar with backwardation, the chart really shows it here, but essentially it's like the yield curve where the spot price of the VIX should be lower than the future dates. Essentially, you should be paying more for a future date on volatility. It's just like a contract. If you're going to buy an option, 3-6 months out, you're going to expect to pay more than the current price of the underlying. But then what happens in backwardation, the spot price becomes higher than the future prices. So you're watching week after week as this developed. That's what these last weeks were. And then this green line is where we're at today. And essentially, the short-term spot price is higher than the future price on the contracts. And this usually means that something is wrong and there is a tremendous amount of volatility. Essentially, it's more likely to get volatile in the short term than it is to be in the long term. That's why the market is actually indeed pricing that. So this creates a lot of issues there, but this is now a little bit more evidence. We didn't get this in the last couple weeks, and that's why I'm saying now we are seeing how things played out. Some things have chilled, but there is a lot of reason to point to saying that, hey, we're going to be getting bigger 1% moves, a lot of volatility, a lot of up and down. It is not done yet, but a bullish week will definitely help us out, and we're going to talk about that. But now coming into your second pretty picture, Wall Street is already shading retail, man. They did not waste any time. They said the retail was dip buying, saving us, and they're coming after you. But essentially, this chart is showing that retail is picking stocks almost worse than ever. So that's what they said. That was the headline. They're comparing a basket of 50 of the most popular retail stocks to all the mutual funds. And as you can see, those stocks are down 5% more on average than any of the mutual funds or any of the safer stock pickers, more or less. So as we are getting more volatility and how things definitely play out, the health of the retail is going to be important. I mean, over the last year or two, the trend has been about 18 to 21% retail participation. So there is a lot that could come through that. So keep your eye on that, and even in the small caps. But as far as the rest of the week, you're going to be getting some more economic data, and it could have an impact. Again, the CPI on Friday will definitely be key, as well as the other central banks that are going to be reporting, like Canada and a few others. They will be making interest rate decisions. So if they lag or lead on anything, that could be an indicator. But like I'm saying with the premiums, where today was good, if we have one good day tomorrow and it ends up holding up, that would be amazing, because then you will probably see the call premium start to go up a little bit. The puts might get clapped and you might have people feeling good. But as long as we don't get any negative developments and the market is good, it could actually be very bullish, because you have the Fed blackout. So what I'm trying to say is that if the other headlines like the virus or anything else, if people really do chill out on that this week, they are not going to freak out about a Powell put, because it'll probably be reflected in bonds. We're going to have a ton of bond supply today, so that might make bonds go up a little bit higher and reverse some of that recent panic trend. But then at the same time, you're not going to get any hawkish statements from the Fed till December 15th. They're not allowed to say anything. So chances are a lot of stories could develop. If attitudes get good, market may very well just ignore the taper tantrum up until Powell speaks, as long as we don't hear any headlines on it. So it's really going to be about all of this stuff we've been watching since last week. Keep your eye on the virus, keep your eye on Powell, and get ready to wrap up the end of the year. But coming into the company news and events now, the first one is China, and this one's actually really, really big in my opinion, but not so alarming, because it's only their reserve requirement ratio. It's not their key interest rate like the Fed, but they decided to cut the RRR by 0.5. The last time that they did this was in July, and pretty much this is a sign of easing, and they even said it, that they are looking to support the real estate market. So that was both good news and bad news. It means that they're slowing down, but then this could facilitate liquidity. We've made a couple videos on this. I would watch it, but overall, if the Fed was going to start tapering faster, doing something like that. This news goes hand in hand. Remember, if China is easing, that means the rest of the world is tightening, and then vice versa. But that was the first piece of news. The second one, this one's related to the debt ceiling, but congressional leaders said that they are going to eye a new procedural maneuver to tie the debt ceiling to the defense bill. So the defense bill, it's a must-pass bill. It usually gets bipartisan support. So they're trying to see if they could move one of these things around, kind of like the budget reconciliation, and tie the whole entire budget into the defense bill, and then that way you avoid the debt ceiling crisis and force everybody to vote on it, or pretty much raise the stakes with everything else. So that was an interesting one. We will see how that one plays out. We did avoid the government shutdown, but the debt ceiling is still in play, and that will come up this month, probably in a few weeks. It does overlap there with Powell, so keep that in mind. And then this one's crazy. I thought this one was very interesting. Devin Nunes, California representative of Congress, he is quitting Congress to head Donald Trump's new media startup, and he was actually in line to head the Ways and Means Committee in 2022 if the Republicans took office. So he declined to comment on anything, but this one was kind of interesting. There was a lot of different news on the stock this morning, so we will see how that plays out tomorrow. And then Jack in the Box, they announced that they're going to be buying Del Taco. It's going to be like a merger agreement, and even at the premium, they're actually getting quite a discount on it. So seems like a lot of people liked it. Both the stocks ended up moving today. I will definitely keep my eye out on that this week. And then the United States did announce that there will be a diplomatic boycott of the Beijing Olympics. We will not be participating. This is all related to the civil rights stuff and all of that. So kind of a big move. I'm actually pretty impressed, especially coming off the heels with the China delisting news and all that. So we'll see how that plays out. And then finally, we heard this today, and I'm telling you, you're going to hear a lot about this right now, but you may not want to react to it just yet. This will have implications on oil and global currencies. My timeline, this is just my estimate. I'm thinking end of January or middle of January, you will probably see more escalation in this front. But Biden did say he is going to be warning Putin tomorrow. They're going to be having a phone call. They announced a lot of stuff today, and the U.S. said that if Russia attacks Ukraine, they will go after them, but they said not militaristically, it will be economically with sanctions, and they said it would inflict severe economic harm. And even after hours, they said that they are considering banking options. They said they would even remove Russia or ban them from the SWIFT payment system. So that could have a lot of implications as far as how money would move and all that. We talked about this situation today, but this one is important. It's not quite there, but it could get a little bit out of hand, and I'm putting a January timeline on that, so watch out for that. But other than that, the politics was very straightforward. We know what we're looking at. Today was a good day. If we get some good breadcrumbs tomorrow, that will be key, but volatility is still there, and you gotta be ready. But that is pretty much it. So let us get into the plays. So right off that bat, I got 3 different stocks that I'm looking at coming into tomorrow. I did make a play on all 3 of them, and I will say today did feel a lot like Monday last week. If you remember, I made a couple plays. I got clapped on one. The premiums were weird. It felt like the premiums weren't moving at all, and I'm just telling you right now, that is exactly what you saw on Monday, and that was something we saw with a lot of contracts. So just keep that in mind and be careful, but I am going both ways. We're getting both calls and puts, but the first 2 plays are earnings run-ups. If I could get a clear-cut catalyst, these are the ones I'm liking. We had the Walgreens yesterday. Boom, they're selling off a unit. Doesn't matter about the volatility. That is its own catalyst. Here with earnings, obviously it could get derailed depending on what happens with the market, but at least we know there is an event that could kind of protect the premium. So I decided to go for an earnings run-up play on Costco. The premiums weren't too crazy, but you had to go for December. So I showed this live. A lot of people were talking about it on stream. We went over the option chain, and you could see a lot of the contracts have already went up, but they were down from a couple days ago. But the contracts with a lot of time, those are the ones that held up the premium. The December 17th, those were the ones that didn't go up too much. So I did decide to grab one of those. Only like 11 days of time. Pretty risky. I only grabbed 2, a 575 call for 170, and this is basic pre-earnings run-up play. So it closed down 2. There's a wide spread on it, but you've seen this many times. I'm going to play it before earnings. I'm assuming the earnings IV will keep the premium in a relative range. I mean, you have seen them drop 30%, so the play is completely immune to everything, but the idea is premium should hold up. We play it coming into earnings, and then we just flip it right before earnings. So pretty simple strategy, always a little bit of risk. We've done it a couple times. It works more often than not. But again, it just all depends on what's happening, and there's just a lot of things going on with the option chain. But like I'm saying, as long as there's its own catalyst, I'm really liking that play. That was the first one. And then the second one is Lululemon. Same exact logic there as Costco, but there's just more risk and more upside. And I say that because all of the contracts have been absolutely battered. So Lululemon, if you look at the option chain, you'll see they got clapped, and it's just both good and bad right now. They were doing very well. They kind of sold off a little bit here. Some of the retail stocks like Macy got clapped. Remember before that, some of them were doing good, or it was like, was it Macy's? I think it was Ralph Lauren and then Macy's, but they're starting to come down here. They're reacting, but essentially those premiums were holding up a lot better. So that's why I liked it. I was able to go out till March because every single one of the premiums is down almost 50% from a couple of days ago. So that's why I liked it. I did want to keep it small, but I still spent like $900 on it. I only got one contract, kept it close to the money, a March 520 call, and I spent $835. So went up 10% coming in there to close, but the same logic here. We hold it into the earnings, and then right before earnings, I'm going to sell out. But like I'm saying, they've sold off a lot. If they're able to kind of set a floor here, which is pretty much where they had their last earnings, I'd assume that'd be a fair level. If the premium goes up, we should be able to get a good play. But that was the second play. And then finally, Microsoft. I took one of the plays today. They had news. It was them raising the prices on some of their services. And again, Wall Street has just been loving any sort of price hike, especially if it's software related. So I like that. But just in general, we've been watching this play. Remember, I grabbed those old Microsofts. Those are still down. So after I got the news today on the price hikes, I was like, okay, maybe we'll get some. Today's been pretty bullish. I could be getting ahead of myself, but in general, any of the other calls that we bought, they actually already went up. So that's what I'm saying. Well, I think the Microsoft premiums are just the lowest out of any of the big tech. And just overall, I like the strength that they've shown throughout the year. So this was a big factor. I decided to just get one of the 355 calls for March. I bought it for 830, so that went down 5% there leading into it. I guess I top ticked it on there, and then here are the old plays. I got the 390s. We got more quantity. They were a little bit further out the money, but those plays are down 30, so this is what I'm saying. Compare that to even like the Apple play, which we got on the upside, or even like the IBM. That Apple play, it says it's up 42%. I think that's because of the ask there, but it should be up around like 20 or 25% or something like that. So to see Microsoft go up, they were kind of that second strength candidate, and then we started getting clapped. I think those are the ones with the good deal on the premium, so we'll see what happens with that. But those are the main plays. As far as everything else, we just did all those plays. I did grab a play on the Japanese yen here, FXY, the $85 call for 120. I grabbed 5 of them. The liquidity is awful, and we talked about this play. I like it playing the yen. Essentially, I'm thinking the yen could get stronger. This is tied to the volatility, and I just brought this one up here today, and it's just something you could see, you know, compare the VIX, the backwardation, go look at any SPY, the puts, how things have moved, and then look at FXY. This is a safe haven move, and maybe this chart shows you why, but essentially, this thing hasn't moved, so I top ticked that play just because there was no liquidity. Otherwise, after the end of today, if you got in after I got in and the spreads chilled out, it pretty much didn't move at all, so this is why I like the play. It's giving me like a chiller volatility play, but if nothing happens, I mean, this could decay and you could get clapped pretty easily. So watch out for that. Then the Walgreens, even though I wanted to hold this one, it was only January. We were talking about how the real bounce plays with like March, April, those are holding up the best. I had 40-50% there in the morning. I took the profits on that one. And then I grabbed an Intel in the morning. This one was a whiff. I lost like 30%, maybe like $100 on it. I tried to keep it small. I think I could have went a little bit smaller. Where is it? Right there, 31%, $95 there. So I guess I put $300. Again, I just wanted it to be a little bit smaller on that. But I played this because NVIDIA and AMD were really, really down in the morning, and then Intel was holding up. I didn't think they would be a leader. I thought they would kind of catch up with it. So I said, okay, go for the one with the least premium here that's not already getting clobbered, but everything bounced. So that was a dud. It's still till January, so we'll give it some time, but see what happens with that. But those were the only other plays that I made today as far as everything else. I'm going to be watching that Tesla again. They had a lot of different news. SEC investigated them with the solar stuff. There was even a New York Times thing, but I had the put. I was up 140% in the morning. morning. I was going to get ready to take profits, and then it just bounced real quick, and I was like, all right, well, it's held 70%. I'll hold it. Then throughout the day, it went up, but even at the end of the day, this thing's still up 22, so I've taken a lot of profit. You could even see we closed up today. Remember what we did on Friday, taking all of those put premiums. It really did save us a lot of money, so I was able to even capture some of the upside here. So it's good to kind of hold a put. I still got some cushion on it, but going to be riding that one out there as well. But watch Tesla. I mean, they're pretty much going to be in the middle of everything tomorrow, so keep your eye out for that. Uber, or Airbnb, excuse me, our play premiums came up on that. Those Januaries, they cooled down a little bit, but if this starts gassing past 180, the premiums are expensive. Even on April, they came right back to life again. For the longest time, the premiums were more expensive than the stock, and it's kind of showing why. They've rebounded, and they're back above that Friday gap down, but they started selling off of different virus fears leading into that, so I think they have a lot more unnecessary sell-off room on the bone that they could recapture. I think Airbnb is lagging behind, so I hesitated a little bit on the April option today, holding my Januaries. If those do get cheap either tomorrow or throughout the rest of the week, this one is still in play. Do not sleep on it. This thing is ready to move, so I really like that play. Watch out for them. And then Uber, I don't know why I pulled up the platform, but Uber, they did good. I would have got some here on the long term. I mean, this has been a very, very important range that we've been looking for, but this was a great move. It ties into the travel stocks. Watch if they get a 2-day continuation. It just seemingly hasn't had that, so I think that would be a very good sign. Watch the airlines. Again, one of their biggest moves. They're still at a pretty low point. Like I'm saying, just like Uber or Airbnb, they kind of sold off a little bit before the Friday gap down, and some of them were able to come back up, but that was a very strong industry. Watch out for them. Walgreens, still like it. Again, we took our profits on the play. Still got our shares, so we could capture some of that, so I'm going to keep my eye out for them. And then Roblox, this one was very interesting. It's going up after hours. Our plays actually might come back to life. I don't know if you guys are holding some of those, but one of the December ones, those are dead, but those Januaries, they came down a little bit, but they're only down 68. But one thing I noticed this morning is that my puts actually came up in value. So when they were dipping, so pretty much is don't underestimate Roblox's ability to come back to life. I mean, I just saw it with the puts. They ended up closing down, but it was a very, very wild move. They're going to be hot. There was an article with them and Apple, and pretty much Apple has shown favoritism towards Roblox. I don't think they're going to get in trouble for it. If anything, it just shows their relationship without Apple, so that was good. NVIDIA, they had an epic bounce today, but they still closed red. They were down 5% at one point. If they do have any sort of pop and lock, this one could be good just for volatility and everything else. Watch them. Same thing with the Intel. Microsoft, I'm still really liking as the safe haven play, but the premiums just are not agreeing with any of us at all, so watch out for that. And then Amazon, I want to look at the premiums. I think how they set up tomorrow, it might really be a key, because again, it's either going to start stalling out, but if it does sell off and if we do get volatility, that could be bad. But I think both of the premiums now are going to get compressed on both sides, so I'm really liking that. And then OMA, the premiums held up today. The event is going to be here. I believe it starts tomorrow through the 10th. The premiums, they're not going at like the 90 point, but they held up, so still holding that play. A lot of people ask, pretty much I'm gonna hold it up until there's the event. If I could get 50, 100%, or even a decent, maybe even 30, and I could flip it a couple times leading into that, I'll sell. But if there's that no opportunity, I'm just gonna ride until the catalyst is there, and then we will see where everything ends up. But coming into TLT and the dollar, TLT finally chilled out today, and if you were really watching it go up after hours, okay, that's a glitch. It has to be. It finally dropped here today, and you really saw it correlate with the market. I mean, just as TLT came back to these levels, so did the market. It came back to that Thursday level. We were doing that a lot live on stream today, but this is very key. Really, all you need to watch for TLT this week is there a cap? Does the bond supply and the fact that Powell's speaking, does it really set this as the temporary top? And I said this early today, I'm looking for a simple pattern here with TLT. It's having one of these breakouts. You could either be right here and maybe you get another move, but I think it might mimic something like this where we had our breakout here, you pop off, you come down a little bit, it's going to come down, but not all the way, going to base out for a couple of days here, maybe have a little pop coming into Powell, and then day of Powell, day after, then it will be free to move. So that's what I'm expecting here. Anything could happen. Again, I could be totally wrong about this. I'm just throwing that out there to see what happens, but otherwise, if bonds keep going down, TLT goes up, market may panic, and if it doesn't, you might be able to chill out this week. That could open up the door for some divergence, so that will be the key. The dollar is still up there kind of doing its thing, but with this week and everything happening, unless the dollar leads and gives us an easy signal, the answer is going to be all in Powell's hands in the next week, and that will be the confirmation, and we should be able to get an easy move from there, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning, guys. I need the armor on. I need the helmet shine. I need you to remove some distractions, baby. But Nicole loves you. I love you. And we'll see you in the morning. Let's go.